In this video, you'll learn everything behind the recent explosion on the altcoin markets as the Fed has decided to do nothing. But yet, we are having the biggest surge on Ethereum. Let's get started. On Wednesday, the famous Fed meeting took place where Jerome Powell was just starting to speak like he's the new Pope, deciding what we're going to do with the interest rates. And he decided to say, fuck you all. We are not going to do any rate cuts at all. But despite that, we are having an actual run on the altcoin markets. It's the biggest surge on Ethereum since 2020. And even in May 2021, we had 2 days in the peak of the bull. But it's the biggest breakout since 2020. And you might question that we are going to give it back as we have been giving it back in the previous 5 years. But usually when there's such a big breakout, it's not the time that the altcoins are giving it back. It's actually the time for a complete reversal on the markets. And if we go back to the Fed meeting, we saw that during the announcement, Bitcoin basically dropped from 97 to 95K. However, the announcement itself wasn't the most important factor. It is about his speech and what comes afterwards. And basically his speech was saying, well, the tariffs could be inducing higher inflation, higher unemployment, and that would automatically mean that we're going to get into worse territories. However, tariffs are not implementing higher inflation. They might be implementing higher unemployment, and when there's higher unemployment, he needs to start doing QE, and he needs to lower the interest rates. And as a response, since that period, we've seen that Bitcoin has been breaking through 100K. As we have had some other news items in which Trump has provided an important announcement with the trade deal that he signed with the UK, in which this is going to lead into a positive business cycle. And second to that, we also had news from China that basically cut the lending rates by 10 basis points, and they reduced the bank reserve requirement ratio by 50 points, which means that the interest rate in China is the lowest ever. And when the interest rate is the lowest ever, it's super cheap to borrow that asset and invest it into assets that are making more money. While in the US, the interest rates are still 4%. So if we go back in time, in 2021, we had Bitcoin at 69,000 with interest rates at 0. And now we are having Bitcoin at 100K while interest rates are still at 4%. So you understand that when the interest rates are going down in China, it improves the appetite to go into risk-on assets. So this is resulting into an easing of the policies and more liquidity being added into the markets. And as a response to that, we've seen that gold is consolidating downwards and is likely peaking. And it might also be the case that what the Fed is doing is not as important anymore. It is more important to look at China, for instance, and to look at the data. And there's also a reason why Trump all of a sudden said that he doesn't want to have a deal or he doesn't want Powell to be fired. He's basically bypassing Powell and creating deals everywhere and doing all the things that he can to improve the economic growth in general. So he's trying to do that outside of the Fed. And we can start seeing the implications of that in the charts, in which the first thing, as I mentioned, is that gold is currently peaking, and gold is usually the one that's providing the most indication of uncertainty in the markets. And that was extreme in the past 2 years. We had 30% increase in 2024. We have seen a 30% increase in 2025. That is very unusual. And when that is happening, we don't have any return in stocks, technology stocks, crypto, and all those sorts of assets. Well, right now, gold has already corrected by 5%. It starts to indicate that we are peaking. While on the other hand, the Chinese renminbi goes up. And if you recall correctly with the charts that I've been providing, if the Chinese currency bottoms out, Ethereum bottoms out too. And again, history repeats itself, in which we have had the bottom in December 2016, September 2019, and April 2025. So basically, business cycle goes great, dollar goes down, China goes up, and Ethereum goes up as well. And that is also provided through one of my friends, Raoul Paul, who is making great charts in terms of liquidity and macroeconomics. He has made a presentation in Sui Basecamp where he has that great chart on liquidity expansions and liquidity supply, which basically indicates that if you have one asset that is going to be increased in terms of supply and a scarce asset, that if this goes up in supply, this goes up in value. And that is mimicking itself 1-to-1. And if it continues to follow through, then we will see Bitcoin going to 150k in this quarter, and it keeps on following the route. And now if you also know that if the liquidity is going to be added and the business cycle is going to improve, then this is the moment where Ethereum starts to outperform Bitcoin. And that's what we can see in the charts. And that's also what we start to see in my portfolio. The altcoin portfolio is still down more than 50%, but it's up a little bit as the markets are waking up. And as I said over and over again, if the altcoins start to turn, they will turn in a fast manner. And that's what we see with the portfolio, which went down to almost 70%. And now it's up already more than 30% as we're currently hitting 52k. So that's technically still down 50%. But this portfolio is designed to go heavily onto the risk curve. And what I mean by risk curve, I've been discussing this in the previous updates, but basically if you are investing into crypto, you're already investing into very risk-on assets, and Bitcoin is the least riskiest asset of crypto. And then you have ETH, and then you have Ripple, and then you can go into Solana and all those things. But if you go into smaller market caps, then the volatility will increase as they are newer technology and there's no price discovery as of yet. So in our portfolio, we basically have newer coins. In the sense of the bigger ones, Optimism and Tau are also still relatively new. And if we go further into the portfolio with Omni and Renzo and Wormhole, they are tiny caps compared to the bigger ones, and therefore they can have drawdowns of 80 to 90%. But once they start to turn, they can do way bigger upwards returns than all the bigger caps. So yes, we experience a lot of downwards volatility, but once it starts to turn, we'll be back into profit quite quickly. That's why I'm very happy and pleased to still be into this altcoin portfolio. And as you can see in the spreadsheet, we have been doing some mutations. I've been discussing this in the previous updates where we rebalanced the portfolios. For instance, one of those actions was selling ENS and getting into newer ones. The other action was to basically sell a little bit of Tau, as we can see here, twice, and then rebalance that into all the portfolio coins, through which our average price has decreased substantially from most of those assets, as we started buying some of the coins way higher. But now, for instance, Renzo is at 6 cents, while we started buying this one at 14 cents. So if we get back to 6 cents, we are break even on Renzo. And there's one asset that we are actually break even on, which is Tau. And that's a great sign. And there's something we need to take into account when we look at the portfolio, is that Tau is again the biggest allocation into it. And then secondly, we have Psi. So perhaps in the next few weeks, we need to start doing the rotations a little bit to keep the allocations in line. But first and foremost, we are making a return again. And the reason for that is that we are having those returns based on the macroeconomics. So for instance, here we can see that the Chinese currency, renminbi, has been going up. And finally, Ethereum starts to go back up again. We can see that we have been bottoming out in April. And now we have also started to bottom out in the exact same week on Ether versus Bitcoin, which is the same in 2019, which is the same in 2016, and again, it's the same in 2025. And now, if we look at gold versus ETH against Bitcoin, we can also see that since the moment that gold has basically bottomed out in September 22, that was the moment where gold started to do a 2x, and inverse is that Ethereum started to do a minus 80% against Bitcoin. And as you can see, we peaked on gold 2 weeks ago, and it starts to have a top structure for now. And basically from that moment in time, we see the upwards move on Ethereum against Bitcoin. So you can start seeing the correlations between the two asset classes and why it's super important to understand this, because if you understand this, then you can start identifying midterm corrections into the trend, and you can start identifying these moves in the coming 10 to 20 years as well, as this pendulum will continue to go back and forth. And through understanding this, you can yield yourself more Bitcoin than basically trying to predict the next 100x. So yes, we're getting into a better stage, and I discussed in this video and in the previous update that altcoins are finally printing a massive bullish divergence. And the first thing that I wanted to bring up here is that we have AVAX that basically shows how things can move and change quite quickly. In 2021 or 2020, I was holding an altcoin portfolio that went down 80%. And based on the charts from that moment in time, you were thinking that there was no upside going to come. And then all of a sudden, it did a 10x in 6 weeks. And the crucial factor here is that every time when the charts look like absolute garbage, that's the moment where they can start reversing. And when they reverse, it's super hard to get yourself back into that position, because your mind will tell you that it's a fake move and it's likely going to correct back down again, or it doesn't provide you any chance of getting into the position. And we've seen that as well in the summer of 2021. And we've seen that in October 2023, when we had this first run of this cycle, where even AVAX did a 4x against Bitcoin, and hardly any correction took place. So that's why I'd rather want to be positioned into altcoins too early, because being too late is really hard to get into that position and to convince yourself to hold for a longer period. And now the good part is that most of the altcoins that we currently have in the portfolio, for instance Optimism, is starting to print good weekly candles or bullish divergences. And the question is, where am I going to start taking significant profits? And I mentioned this before, but the first real run, all the way from Q1 until now, I really want to see that reverse, and then I'm going to start discussing take profits. Which means for Optimism, I want to see it double against Bitcoin. And that's the moment where I start scaling off my positions into either Bitcoin, Ether, or other assets that are likely to continue to surge at that point, or just de-risk. So for Optimism, I'm looking at 1500 sets, which is a 2x from here. And if we're looking at TIA, it's basically just finally starting to wake up into a bullish trend. And if we look at where it comes from, it's also more than a 2x from here, where I start to take profits and start allocating it towards Bitcoin and ETH, having less allocation towards all these risk-on assets. So my key plan for now is to stay into the positions as long as I can, because the start of the actual return of my portfolio and the returns in the long term is heavily skewed towards this first period. If I'm able to utilize this the best I can and to stay into the markets as long as I can, then I can start compounding the returns throughout the cycle, and that's going to make a big difference. And that's why, for instance, things like Wormhole, they still have a massive weekly bullish divergence, and we don't know how much the upside is going to be, but we do know that the new coins are likely going to be providing a return that's way higher than most of the people expect at this time. The altcoin markets can go all directions, mostly down, and they can go down for a long period of time. And you need to realize that this bear market has been 4 years. The previous bear market has been 2 years, and the one before that was 2.5 years, and that was the longest until date. But this one has extended the length of the bear market, and that is basically shown in the sentiment on everyone's social media or any investor that has been investing into the altcoin markets. But the longer the bear market, the longer the bull market, and usually the longer the bear market, the heavier the breakout will be, and the heavier the returns upwards will be, as we know from 2017. 2017 was significantly bigger in terms of returns, as there was also a bigger curve in adoption. And as we can see and tell from this cycle, is that the adoption is going to be into a next stage, which improves the entire revenue and return that we can have as an investor into the altcoin market. So I'm more than positive about the outcome. I expect to do really well. I think that if you are in the markets and you have been staying in the markets and you have been holding the markets and you have been holding your portfolios, you'll be fine. And I hope that making content on this journey, the hard it has been or how hard it has helped you to hold the positions. And I hope it's going to help you by making a big return in the coming 2 years. So until next videos. During these markets, I'm always looking for opportunities to build my portfolio, and OKX is bringing you an opportunity. They are the first fully licensed exchange in Europe with the lowest fees. And to help you a little bit with your portfolio and to celebrate this milestone, they are giving away up to 50 euros in Bitcoin if you sign up today on the exchange. Signing up can be done within 5 minutes, and if you deposit 100 euros worth of crypto, you'll receive the first 20 euros in Bitcoin. Start rebuilding your portfolio today. Go to the link in the description or scan the QR code and enjoy up to 50 euro in Bitcoin.